So I've already set it up that you're a talented and fair economist, right? So that's the, we have to look at that. So if I say to you, this is good news, jobs report's good news, is that which is what I do pretty much think it is. Am I missing anything today? How do you read it?
Oh, it is good news. Absolutely. We had downward revisions to the last couple of months, but we're still pretty much where we thought we would be. And that is with solid job gains and a 4.2% unemployment rate. And that's good. The problem is, of course, this was an early in the April report, and it's really more backward looking than forward looking. And we do know that since the report came out, we've had a lot of disruptions, most notably in trade with China. In fact, trade with China has come to a virtual standstill since then. And we know that the ISM manufacturing index that was taken much later in the month actually showed a decline in production and increase in input prices, the exact kind of stagflationary high-end that we didn't really want to see. So we could still see some disruptions out there. We think we're going to see more disruptions as we get into May and June. But for the moment, at least, the economy is still on firm footing.
Yeah, which I guess the good part about that is if we are going into a tough time, you know, we're going into it in a pretty good place, right? Now, I'm curious to see how executives that run companies are kind of what their mindset would be in this time. Because to me, you know, the odds of President Trump kind of pulling back on this trade war, cutting some deals and getting some sort of an off-ramp may be just as high as him pushing forward and ramping things up. So from a jobs perspective, you might not want to cut back on your staff, you know, too early, lose your talent, and then all of a sudden things get better. So is it going to be wait and see? How do you think the big companies will play it out?
Well, it is a bit of wait and see, and I think that's important because the more you wait, the more you're not ramping up like you usually would, or you might not be filling jobs that you usually would. And that is some of the thing that we're going to be watching for very carefully in the next couple of jobs reports. So this is, you know, all still ahead of us, but the uncertainty is its own tax on the economy. And I tell you, I talked to an awful lot of CEOs out there, and they are very uncertain right now, and they're not making big decisions. They're not making big investment plans. So that will come back and haunt us. We also know that some of the underlying strength in the first quarter, even though it came out as a negative overall, was actually because people were buying ahead of tariffs. We saw March was biggest increase in retail spending that we saw since in 2 years. And that was because people were buying, those who could, bought cars ahead of time, people bought iPhones ahead of time. And we saw a 69% increase in spending on information technology by big companies. That wasn't just out of nowhere. That was buying ahead of tariffs.
Yes, you saw that in the GDP report. I also think that's like a really interesting perspective on things is that it's good people aren't firing the workers, right? But the idea that they're not going to be hiring new workers or picking up on their spending is something to keep in mind for the economy. How big a deal is this? You know, before now, Trump got rid of it. Something coming in $800 or less from China, there'd be no tariff. Here's what the president said about getting rid of this, as he calls it, a loophole. Listen.
Very important. De minimis. It's it's a big deal. It's a big scam going on against our country, against really small businesses, and we put an end to it.
All right, this is a big scam. What's the impact of this, though? You know, people buying, a lot of people do shop online, especially, right?
To inflation when we saw tariffs go into effect the first time around. So this is something we have to watch very carefully. I understand it not being a fair deal, but the bottom line is it did help to hold inflation down.
Right, because there's a lot of people making small purchases. That's like when everyone's shopping online, buying a, you know, I know in my house it's a soccer jersey or whatever it is, you know, coming in from China. That's obviously less than $800. So this is a lot of consumer spending. Is it? What might happen? People might switch to other, you know, or just not spend at all.
I think we're going to see on the low end, we've already seen many consumers have pulled back and they've been trading down. And so that is what we worry about. We worry about that effect continuing and those cheap goods not being out there. They're not going to be sold and they really are going to be too high for many people to buy. And it's, you know, that's the part of it that, you know, some of these things we can argue about whether they should be there or not, but they are part of our economy.
Yes.
And they were a major disinflationary factor in the economy. And that going away does have an impact on the upside to inflation.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.